Greg Andruck here with another post. It's related to our Business Freedom Conversation newsletter live stream. So, last night in the wee hours, the Democrats passed what they are calling the Inflation Reduction Bill. And a curious beast that this is. So, the main provisions are that of the 150 largest corporations in America, there's 30 or 40 of them that have book income of $1 billion a year or more, but they don't pay any income tax. And they're not saying that they broke any rules or did anything like that, but they're just saying they want their money. But those corporations, have Section 179 depreciation, which allows you to write off 100% of your capital asset that you bought. They have, you know, employee retention credits. They have deductions that cause them to have no taxable income but a book income. So it'll be interesting to see what happens with those. They did soften the provision where they're going to allow them to have accelerated depreciation. And I don't know, I haven't seen the final text of the bill, so maybe they don't allow Section 179, but this is just basically a grab for profits. The big thing that's going to affect all of us small business owners is that they are allocating $8 billion a year to the IRS for enforcement. The IRS's current budget is between 12 and $13 billion a year. So you draw your own conclusion of what it's going to be like in a world where the IRS's budgets increase 75% for nothing more than coming after you and make sure that you're paying your fair share, as they like to say. There's a gasoline excise tax, which is quite curious. It's not a really large one. I heard it was 16 cents a barrel. There's 48 gallons in a barrel of oil, but still, how curious in an environment where we've had gas go up so much that they're going to tax it more. They did do one thing that's positive. They increased the R&D credit to up to $250,000. I've been doing this for 6 or 7 years. I use Baker Tilly, the major firm, as my outside CPA firm. I will tell you that it's really tough to do this with a major CPA firm because they're scared. And apparently there's units all around the country. So Congress giveth and Congress taketh away, or maybe I should say Congress giveth and the IRS taketh away, because Baker's very nervous every time I take these credits because there's units around the country in the IRS to do nothing but audit these employee retention credits and R&D credits and that type of thing. And they're always afraid of having a client that's going to have these reversed, and then they get in trouble for us doing it. Part of the bill it's an $800 billion bill. 300 billion of it is supposedly to deficit reduction. So all of this I kind of take with a grain of salt. I really wouldn't call it an Inflation Reduction Act, because if you're going to take away deductions, all businesses operate on the net after tax. So if you're going to reduce the net after tax of the top 150 corporations in the United States, you're going to see some pretty big impact. And it's not going to be positive, and it's probably going to cause them to raise their prices to have the net after tax be where they need it to be.